The question is, what taxes are involved in selling my house in Washington State? The taxes involved when selling your house in Washington State range from the local level all the way up to the federal level. Let's break it down right now. First, when you sell your house in Washington State, you're going to pay state sales tax. We call this state excise tax. Typically, the rate you'll pay on a normal level sale under $1 million, give or take, will be 1.78%. If you're selling a more expensive home in Washington State, then there's a sliding scale on how much the state will charge you for sales tax. But a good rule of thumb is if you're selling a home under $1 million, then your tax is 1.78%. Next, if you're selling your home, it's possible you will pay capital gains tax. You may pay capital gains tax if you're selling a primary residence that you've lived in for a while, or if you're selling an inherited property, you may also pay capital gains tax. If you're selling a property that's been a rental property for you, you are definitely going to be paying capital gains tax. If you're selling a primary residence and the IRS specifies that a primary residence is a home that you've lived in for 2 of the last 5 years. So if you've lived in this property for 2 of the last 5 years, then you are eligible for an exemption towards this capital gains tax on your primary residence. The IRS will tax you a capital gains tax for any amount that you're profiting off of your cost basis. The cost you paid for your home minus any improvements that you've made to that home over time. So let's assume you bought your house for $400,000 10 years ago, and you've not made any improvements to that property. Your cost basis would be $400,000. If you're now selling that property for $800,000, then the amount that you would be taxed on for capital gains would be $400,000. Your capital gains rate can vary depending on how much income you make and how you file your taxes. It can be anywhere from 0 to all the way up to almost 30%, around 28% capital gains tax, depending on how much money you make and how you file your taxes. Now, there's a very key loophole. There's an exemption for your primary residence. If you're single, then you have an exemption on that tax up to $250,000. So you're not taxed on the first $250,000 of profit above your cost basis. If you're married and you file jointly, then that number goes up to $500,000. So in that previous example, if you bought your home for $400,000, and we're going to say that's your cost basis, you're now selling it for $800,000, your potential taxable liability would be $400,000. Well, you have an exemption if you're married and file jointly. That's the beauty of the tax code. So if you're selling your primary residence and you've owned it for a long time and you have a ton of equity in that property, it's likely you will be paying a little bit of capital gains. But remember, you have that exemption if this home you're selling is your primary residence. I hope you found this helpful. We'll catch you on the next video. Thanks so much for watching.